Okay, hi everyone. Let's take a look at the management strategy paper number 1, where we're asked to explore accrual and cash-based accounting concepts. Okay, now the problem's in front of you. I'm not going to read it. If you need to do that, pause this presentation now and read it, and then we'll move on. All right, now the instructions at the bottom say construct the company's accrual-based income statement, then prepare the cash basis income statement, and then we need to compute the end of month balances at the end of April, May, and June, and using the information, explain the dilemma. All right, now let me switch to another screen and we'll start showing what those solutions should look like. Okay, now on the screen you see the answer to Part A and a little bit to Part B. So for the month of April, this is to the left of my mouse here, they had pool revenue of 40 units times $30. The chlorine cost was $15, so that times 40 units is $600. We had another $100 of expenses. We add the expenses, we net it from the revenues, and we come up with income of $500. Now, using that same logic, our volume of activity was 80 for the month of May. And when I say volume of activity, that means the number of pool customers we had, right? So now we just do the multiplication again. 80 pool customers times $30 gets us $2,400 in revenue. We had chlorine costs then of 80 customers times $15. Do the math, we come up with $1,200. Subtract other expenses. Then we add up the expenses, subtract it from pool revenue, and we come up with $1,100 for the month of May. Using the same logic, we get $2,300 for June. Okay, let me slide down, and we'll show how we illustrate that using the cash basis. And I'm going to slide this down here. So Start B starts right about here on your screen. Okay, so using the cash basis, we didn't receive any cash for the month of April, but we still incurred chlorine costs of 40 pool customers times $15 each of $600, so the same expense that we had above. And if no revenue was recorded and we had expenses, then we had a net loss of $700. Now, in the month of May, we collected from the 40 customers in April $30 each, so we get $1,200. We incurred cost during the month of May, the same as what we did under the accrual basis, which was 80 customers times $15 worth of chlorine, other expenses of $100, totaling $1,300. Subtract from $1,200, and we have a $100 net loss. And then again, using the same logic, in the month of June, we collect from the 80 customers $300, so we get $2,400 in total revenue, and our total expenses were $2,500. So again, we lose $100. Okay, now I'm going to adjust the screen so we can tackle Part C. All right, now you see Part C in front of you, and we see on a cash basis how we would determine those balances. Okay, the initial investment $3,500. This is for cash now, and I said that wrong. Not on a cash basis, but we're going to compute these balances here. So to compute the balance of cash, we start off with an initial investment of $3,500. We spent $600 on chlorine. We incurred $100 of other expenses. So at the end of April 30th, we have $2,800. Now, we have to take that and then roll it forward. We collect on account of May $1,200, so that increases cash. We spend $1,200 on chlorine purchased in May, and we incur another $100 of expenses. So if we add that up, carrying with us our April 30th balance, we get to $2,700 as our cash balance. And then we use the same technique to produce June's balance. We collect $2,400 in account. We purchase $2,400, so cash goes out by that amount. I'm right here now in the explanation, right, to the left of my mouse. We spend another $100, and our ending cash balance is $2,600. Now, with accounts receivable, at the end of April 30th, we are owed the 40 customers times $30 each of $1,200. Now, during May, the outstanding balance would be the 80 customers where we did some pool services. They haven't paid us yet, times $30. So that's $2,400. And at the end of June, using the same logic, we have 160 customers times $30. So we're owed $4,800. Now, interesting enough, the supplies balance is always zero. They purchase sufficient supplies to service the month's customers, so that at the end of every month, supplies are purchased. And the last comment, I'll scroll, or let me slide this a little bit here. And then down at the bottom of the screen, to take care of part D, one observation you can make is that the rapid growing business has resulted in substantial resources being tied up in receivables, and the rate of cash collection isn't as fast as what we're billing in receivables, and it isn't enough to keep up with the cash outflows. Okay, so the accrual basis income reflects healthy and increasing profitability, but the cash basis statements will show the negative cash flow that's happening. And that's an explanation of what was required for a perfect score on the MSP assignment number 1. Thanks, everyone.